Hi, everyone. In today's episode, I want to cover the recent volatility, specifically from a macro and technical aspect. I'm going to have an interview here with Harry Dent, the David Lynn Report. Make sure to subscribe to him. Harry Dent is really famous. He's been calling a fall for like 2.5 years at this point. He's been wrong for 2.5 years, but it doesn't mean that the macro pieces that he talked about aren't going to happen eventually, or maybe they're happening now. We don't know. But his perspective is always interesting. He does a lot of demographics based on population growth and spending. So I'm going to let him talk for himself.
uh, Bubble bursting, tech rotation. Warren Buffett sold half his Apple holdings over the weekend, so that contributed to the fears. The yen reversal of the yen carry trade that happened over the last couple of weeks that sucked capital out of the U.S. markets. Israel and Iran. Iran is expected to possibly attack Israel sometime this week, so that's ratcheting up geopolitical tensions. Domestically, there's recession fears. There's a variety of things all hitting at the same time. What do you think is contributing to this volatility?
I think which is the yen carry trade. You know why? That's the last place since the Europe, the United States started raising short-term rates substantially from 0 to 25 basis points up to 525, 550. The only place now you can get cheap money is through the yen. The yen you can still borrow it near zero. So when Japan just raised rates a quarter of a point, now the traders and the people driving the markets are saying, now they're going to start raising rates. And now there's no more zero free money. And I think they're throwing a tantrum up. I think that's the biggest reason the markets came down. But the bigger point is, if you keep blowing up a bubble, it won't take more. It'll take less and less to prick it because it's so overvalued. So it didn't take much, David, to get this little short-term correction because the markets are so blown up and overvalued. They haven't taken a meaningful correction other than COVID, and they blew us out of that immediately in 14, 15 years now. So the markets are overvalued. That's the problem. Not that, we did this or didn't do that. But the markets are way overvalued. The economy's been stretched. Consumers keep trading up to big. How often can you move and trade up to a bigger home? How much can you fix up your darn home? I think we're hitting what I call the exhaustion of demand. That it's been so stimulated for 15 years that there's a point where, I can't fix up my house again. Why? It's too much trouble. Okay? You can't fix up your house every 3 years and make everything new or add a new wing, So
Do you guys agree? Do you think that people have, they spent too much money essentially? He's saying demand exhaustion. I mean, do you guys feel exhausted? Do you feel like the homes you've bought, the things you've done, that they're reaching like a climax and you can't go anymore? You can't spend anymore. Things are too expensive, and that you're just not going to go out there and spend. Basically, that we're reaching the top. That's what he's saying. He's saying that the economies and people can no longer, keep purchasing, and because they won't, that the markets will start to drop as a result of that fall in demand. That's basically what he's saying.
I think we're just running out of steam here. The question is, how does this play out, and how much does it play out? I'm just telling investors the upside is very limited here, and the downside is the biggest it's been since 1929 or 1968, and more like 29, because this is a real bubble. So the 60s was not a bubble economy. It was just a strong economy that also ran out of juice. For the same reasons. A generation peaked in their spending, and then a bigger generation at great cost entered the workforce and caused the highest inflation in history. So you had down demographics, up inflation. That was 68 to 82, okay? Well, this is more like 29 to 42 when a generation peaked in spending, and you've got excess capacity and a smaller generation to follow, and you end up in a deflationary economy like the 1930s. So now we're not fighting inflation, we're fighting deflation, and that's why governments keep printing more and more money. They're trying to stay a step ahead of deflation. And I'm sorry, folks, the economy's bigger than these governments and central banks, and a lot smarter, and been around for zillions of years. I think the economy should be allowed to wash itself out, and we should be woman enough to deal with this and quit just taking the easy way out, which just means exponentially printing more money and spending.
All right, I don't see any politician manning up or womaning up or whatever to, dealing with a bad economy. They'll do whatever it takes not to deal with a bad economy, not to go down in history as a bad president, and that's just not going to happen. That's not how things are set up. There's no reward for what he's suggesting. There's lots of pain. There'll be riots. That's just not going to happen, in my opinion. What do you guys think? Leave a comment. If we wash out, it could be healthy, but there's going to be a lot of pain. Do we have any political leaders, anybody who, would lead a charge on that? I mean, I don't think there is. I don't know anybody that'll do that. All right, this next one is one of my favorite when it comes to trading. Rekt Capital. Make sure to subscribe to Rekt Capital. They're very great.
Let's find out. Subscribe to the channel for more videos like this in the future, and let's dive right into it. And of course, like videos like these if you do enjoy them. Let's dive into the video because we have seen a historic sell side volume bar. Just notice if we compare this all the way back to early March, this is the highest sell side volume bar. So this is sell side exhaustion in the flesh. We're seeing extreme seller pressure as well as a downside wick occurring here. This seller exhaustion, whenever we see a sell side volume bar like this, it always precedes buy side pressure, and we're already seeing above average volume in the buy side. So it's very easy for buyers to step in and actually propel price towards the upside whenever we see sellers just sell themselves to death, where they simply can't sell any longer. They exhaust themselves, enabling conditions easy for buyers to step in and prop price up towards the upside. Just notice how this is a above average volume bar, but very similar to this volume bar. And if we actually align these two here, you'll notice that this candle here, it had the same buy side volume, but it wasn't able to break this resistance. So the bulls really didn't have much strength on their buy side volume, whereas this buy side volume, slightly higher, has really produced a phenomenal buy side step in. We're seeing bargain buyers and premium buyers really step in and produce a very decent reaction.
Basically, this is Rekt Capital technical analysis. This is what May, probably almost close to January. We've been chopping in Bitcoin, just chopping, and then historic selling pressure. So the macroeconomists, they've been wrong for like 2 years. It doesn't mean they're going to continue to be wrong. At some point, they'll be right, but they're really bad predictors generally. Like Harry Dent's been wrong for like 2 years, 2.5 years, 3 years. Like he's been just wrong. Doesn't mean he's going to be wrong forever. Rekt Capital takes technical analyst approach to this and just says there's been sell pressure, but probably a 30% drawdown in Bitcoin is unremarkable, quite frankly. And I'm gonna skip to the part where
we're already reclaiming this support here. We've managed to, after such a flash crash, to see premium buying and aggressive premium buying at that appear in the charts as well relative to these lows. So as long as this continues, this is going to be quite positive, and we could be seeing this sort of structure emerge here. We do have a lower high series developing here. Could this be the very beginning of a new higher low series? That's something that I'm watching out for going forward. So far, so good, of course. But we also need to talk about this CME gap and really focus on it, because if you think about Bitcoin's consolidation over the past almost 5 months, it's been consolidating between 60,600 and 71,500, and we've been seeing upside deviations beyond the range high of this reaccumulation range essentially, but we've been seeing even stronger downside deviations below this reaccumulation range. And notice how we've been forming CME gaps around the range low support here. So that's no coincidence that we tend to form CME gaps.
CME, Chicago Mercantile Exchange futures. This is futures is a contract, and those futures, like he's saying, they tend to get filled. So us going back to like 62,500, he's sort of saying that that might happen. It's been happening. It happened in the past. There's a good chance we get to 6,200 soon.
Around a crucial support that needs to be held for Bitcoin. So just notice how below this reaccumulation range low, this is where we see these downside deviations. And as long as we recover from these deviations, just notice how we recovered from this deviation back into the range, and it's possible we'll do the same. Also filling the CME gap in the process, it will be really important to fill this CME gap for price to reclaim this range and continue its consolidation, because historically after the halving we tend to see up to 150 to 160 days of consolidation in the reaccumulation range. We are already seeing a consolidation pattern here, of course not without downside deviations and also upside deviations, but as long as these deviations are recovered from, that's the most important thing. And reclaiming 60,600 would mean that Bitcoin would need to fill this CME gap. It has filled all of these CME gaps over the past several months, so why shouldn't it reclaim and revisit and fill this CME gap as well, just in time for the weekly close? I'm not necessarily waiting for a weekly close above here this week. I'm giving it a bit more time. Even later next week would be a good time to fill the CME gap and weekly close above here. So I'm giving it 2 weeks for Bitcoin to fill and reclaim this 60,600 level as a support. And as long as it does that, we're back to consolidation within this reaccumulation range, and any sort of downside deviations will simply remain as bargain buying opportunities. Thank you so much for watching this video.
So what do you guys think? Is this a bargain buying opportunity? Do you bonds for the 10-year yield? So we had this this downside move right there, which bonds, 10-year bond went down 11.5%, which is huge. It's absolutely massive for bonds to do that. And then we had a historic, things popped up again. But was that huge downturn, was that predicting anything? Do you think? I don't know. I don't know if it was. But we see with the Japanese bonds here in a second, they had a crazy. Well, we can look at the 2-year. That's crazy to the downside. So Japan was the last country where you could buy cheap money, essentially, the carry trade or whatever. 10-year government yield. Yeah, the yield, that's what I wanted to look at. They raised interest rates and it went up. So do you guys think that this is it? Do you think that we're now in the danger zone, that the economy just falls down from here on? I don't know. It could be. I mean, one more chart that I wanted you guys to take a look at. There's a lot of news on this. A lot of news coverage. Rightly so. It's historic. So this is a potentially a head and shoulders, right? And then the neckline could be like right there, right? Like right here. Let me draw that. Let me see if I have room to draw it. Sometimes it's a bit tough to draw things, but essentially, right? So if it chops like here, if we chop just up and down and up and up and down, if we just chop, this could be head and shoulders. It's possible. See, this is my draw tool. I never get to use it. Right? We just chop, we chop. Okay. So is this a head and shoulders, which would then be bearish to the downside? That's what I saw another analyst saying. I don't know if that's going to happen. I don't know if we're going to have a head and shoulders, but it is a topping pattern that is forming, and that's something to watch out for. I mean, I think there'll be a pop when the Fed drops rates. There'll definitely be a pop because of that. Is there enough liquidity in the system for things just to keep sort of going up? Will the crypto markets have a historic break from the pi cycle, which is what we were looking at with Rekt Capital, the 4-year halvening cycle? If that did happen, then it would be a break from everything we've seen thus far, and all the things that happened earlier this year, the Bitcoin ETF, Ethereum ETF approvals, all of that, is now better predictors than the 4-year cycle. But we don't know that yet. Is the party over yet? No one really knows. But something to watch out for, like a price level to watch out for the S&P 500 is like right around 5,000. If it breaks to the downside of that, or even 5,200, if it just goes straight down, that's not a head and shoulders, but it'll probably chop and then go down. That's the most likely thing to happen. So possible head and shoulders, but no one knows. What would you do if the market is just really down, it breaks the 30% drawdowns that are historic but have happened, and it goes down like 40%, 50%, like it just breaks all support? What would you do? Do you get your money out and just live to fight another day, or do you go down with the ship? I don't recommend that. I think at some point you would just liquidate everything and wait a year and get back into it. But you should not go to zero. You should protect your downside risk. And what is your plan for that? What is your price level to liquidate, and then you go into bonds? Right? That's what everyone seems to be doing. It's just they get out of positions they don't like, they lock in profits, and then they go into bonds, right? So we'll see what happens with that. There's no telling at this point, but historic day, the technicals are kind of up in the air. The only one sort of positive that I saw was the Rekt Capital one, but all the other ones were pretty bearish. But the macro analysts, they've just been so wrong. Like, if you took trades based on what the macro analysts like Harry Dent have said for the last 2 years, 3 years, the Eurodollar University guy, he's been just wrong. He's been super wrong. He's so I don't know what you guys are doing, but it's definitely a confusing time. I don't see a reason to pull out right now unless major levels are broken around the 5,000 or 5,200 price level on the S&P 500. And I know we're crypto traders, but the cryptocurrency trades with regular equities, and we can't ignore that, right? One last look at BTC. It's recovered nicely, right? It's recovered, like if you go to the bottom, it's 15%. That's a lot in just like 2 days for Bitcoin. Other altcoins have had better days. According to Rekt Capital, this is a bargain buying opportunity. I am inclined to agree. I don't think the party's over yet. But if it is, I would get all my money out, protect my downside, and live to fight another day. And I suggest you guys, have your own plan for what you're going to do. Thank you guys for watching.